Roscoe, stop! Hello, everyone. Mike Arnold here, co-founder of Patrick and Partners, along with Bob Iacchino, soon to be on here. He's got to leave a little early today, so I'm going to turn it over to him soon. Let me just say goodbye. Hello to George, P-Dubs, Christoph, Gary. Christoph, why does the trigger doubles have you worried? Let's see. Hey, Jake. Hey, I already said. What did Roscoe do? Roscoe's sitting in the background barking his head off at nothing. Evening, Anissa. If I show you Roscoe is... I'll have to talk about Roscoe later. Hey, Santa. Got Mike heated. When he barks at nothing, yes. And it goes on constantly at times. So, let me just bring on Bob. There we go, Bob. We got a lot of numbers out today. We had the ISM, the S&P manufacturing PMI numbers. Both of those came in expansion territory and beats. We had subcomponents for there. We had JOLTS numbers. So what is your take on everything? I'm confused. What's the Fed going to do? Just give us a roadmap so we can all just go to sleep.
All right, so the Fed's going to do 75. It's still not a 90% probability, which I find interesting, which could leave some to some early volatility, because I really like seeing that above 90, 95%. It would shock me if they did anything other than 75. And then we go to the typical story, which is the press conference and the statement in the press conference. Press conference will, I think, matter more than the statement, because if the statement varies, they'll be asking him questions at the press conference about the variation. The last statement wasn't really that big of a deal. There weren't a whole lot of key phrases in there because the Fed's kind of hawkishness was set. So they didn't have anything like "we are looking for substantial further progress on inflation," anything like that. So it was interesting to see that was just kind of set. So there's not a whole lot of things where you'd be looking for if they change this phrase to this phrase, kind of a thing. So we're obviously going to be looking toward what they say. So what does that mean? People, and I've said this before, people are looking for a pivot or out of their damn minds. I don't even care what you think the word pivot means. The best that can happen is the Fed says we're going to slow the pace of rate hikes, in my opinion. Now, I still think the market's likely to rally unless there is some sort of extreme hawkishness. We've had quite a bit of slowing in the data. Okay, so for example, we saw those S&P global PMIs. Most of them were left alone, maybe revised a little bit worse. Those are small to medium-sized businesses. It's not the ISM, which is what a lot of people focus on. Bloomberg put out an article today, and in that article, what I found interesting was, and this is a quote from the article, about 37% of small businesses, which between them employ almost half of all Americans working in the private sector, were unable to pay their rent in October. So 37% of the businesses, which employ 50% of all of us were unable to pay their rent. That is a slowing, quite obviously, in the general health of the economy overall. Then there was the JOLTS number, which came out, which a lot of people focused on the JOLTS number. And I question the JOLTS number. I really do. I question it overall because where it comes from, what it's made up of. The JOLTS number obviously showed more available jobs, but yet the quit rate has slowed, right? The quit, meaning people are not as comfortable leaving jobs as they were 2 to 3 weeks ago. Okay. So why there's more job openings? Are companies again posting, because this is something that was studied and actually turned out to be a fact a couple of years back. I don't know about recently, where companies were posting a job 2 and 3 and 4 times to try and get multiple applicants as opposed to everybody dumping into the same portal. Is that happening again? We don't really know. I question the JOLTS figures. So you notice that Mike's source here for the calendar, the same one I use, has the JOLTS figures as a low efficacy piece of data. So it doesn't have a tremendous effect on the market according to Daily FX here. And I tend to agree with that. Jerome Powell pointed to the quits rate, not to anything else in the JOLTS data. So while CNBC finds it important, CNBC also finds it important to find out what stocks Taylor Swift owns. So take that all with a grain of salt. Okay.
That's how I base my portfolio, Bob.
Taylor Swift might as well just be in ARK investing, because when I saw that story, it was basically the same stocks. Then there's something called the sacrifice ratios. Okay. Now, I have a TV interview, and if any of you are in Australia, I'll be on AusBiz TV in a few minutes, but it's a recording. So it'll be put out like an hour and a half after this because I refused to wait until 6:45 Eastern time to be interviewed. So they're recording me. I'm going to change into a shirt with a collar before the interview. But Powell has said we need to see evidence of prices slowing. To me, the only derivative of that he could see is job growth slowing. And we haven't seen that. The JOLTS data certainly does not point to a Fed that should pivot. It doesn't even point to a Fed that should pause, which is what I think is going to happen. I think the Fed is going to do a little bit of a step back, similar to what the Bank of Canada did, where the market was maybe expecting 75 and they did 50. All right. And there's a lot of really well-respected analysts out there that still think it's going to be 75, 75, 50 next year, and then they'll pause. I'm not on that train, really. I think it's going to be 75, 50, and then possibly 25 early next year, or possibly nothing. Now, again, the sacrifice ratios. Okay, the sacrifice ratio, it's an old data set. And it basically says that in order to affect a 1% drop in inflation, you need a 1% increase in unemployment. All right, we haven't seen even a 0.5% increase in unemployment since the Fed started tightening. And that's why I believe, because these things happen with a lag, I still believe that we're going to have a positive fourth quarter. I don't think, regardless of what happens tomorrow, even if Jerome Powell's ultra hawkish, we'll probably bounce off that because market participants believe, there's plenty of market participants that believe the Fed is going to continue to hike rates in toward the first quarter of next year, and they're still buying stocks because it's about clarity. It's about not being surprised by the Fed. Okay? There could even be an argument, I'm not making this argument, but somebody made it to me, that if the Fed were to pivot or pause now, the market would actually fall out of bed because that would mean the data is much worse than we're seeing. And they know it already because they get the data early. I'm not saying they get the data early. I'm saying that's what this person said to me. They get all the data early. They know what the data is before it comes out. If they stop hiking rates, they must think unemployment is on its way to 6% by the end of the first quarter of next year. I don't think that's the case. Having said that, but if jobs are still strong, and in the last two sets of inflation data that we got prior to this meeting, the core PCE, which we talked about on that day, was strong, stronger than expected month over month. I told you guys a couple of data sets back to stop looking at year over year now because of base effects and start looking at month over month. And the month over month was strong again in the PCE. I still hear people like Jonathan Farrow on Bloomberg, who I actually have a ton of respect for. I think he's a really smart broadcaster. He's also an exceptionally nice guy. I had coffee with him in New York once. He still says we've got a CPI number coming out. They're going to look at that. Yes, I guess, but they've told you they're looking at core PCE. They keep saying it. They keep saying it. And core PCE month over month rose. So we're likely, in my view, to get 75 and 50, and then possibly another 25. It just, all that matters is how much the current market moves have bothered Jerome Powell, because we've been in a quiet period. If you go back and look at the start of the quiet period, it's really the start of the equity rally. It really was. So we gotten all this slowing data. ISM today came in a little bit better than expected, but still slower than last month. But then you look at construction spending. Construction spending, I thought, was the key today to all the data that came out. Construction spending is a top tier piece of data, okay? And it not only came out higher than expectations, but it came out positive where expectations were negative. Last month was revised better, and last month was revised to negative 0.6, and we had a positive one. So that tells me, again, Fed rate hikes have not really made their way through the system yet. That's my whole spiel on the data and what I think is happening tomorrow with the Fed. And having said all of that, I think the only thing that derails the fourth quarter rally is really aggressive Fed speak after this meeting. That's honestly the only thing. Because if they take the step down or the pause, they're not going to be a freaking pivot. If they take the step down or the pause out of the conversation, not just tomorrow, but in coming Fed speeches, which I'm sure we're going to be inundated with, that will likely hurt equities because it's a surprise. All you got to think about is there a surprise in tomorrow's FOMC meeting? And to me, it's not likely. Even if they paused or stepped down, it's not a surprise to the market. The larger move, the bigger pain is to the downside. And it would take a super aggressive Fed to get that to happen. And I don't think we're getting that. That's my whole take on it all.
So
God, that was 12, 13 minutes of shit.
So so if they're not super aggressive, rally continues.
Yeah. I mean, there might be a dip depending on what he says, but overall, unless there's some sort of a definitive explanation of not only are we going 75, we got 2 more 75s in us and then maybe 3 more 50s. That's where the pain shows up, and that would be the surprise. The market is now prepared for what the Fed is doing. Mike, you just put up December's probabilities.
Yep.
It's pretty balanced. I mean, it's pretty much, there's people who think 25, there's people who think 50, there's people who think 75. Actually, that might be 0, 25, and 50. I can't really see it from here.
Well,
what
tomorrow we're going to 375 to 4.
Okay,
This
so what's
then
that?
is 4 to 425, so that's a 25 basis
so 25,
point.
50, and 75.
Yes.
Hawkishness is not really going to be that big of a surprise, I guess is my point.
Not if this is still at 49%.
Yeah. Put Tim's comment up, would you, Tim McLean?
Tim. Oh, well, I know why. I agree with Bob's take.
No, that's not right. Tim and I have disagreed in the past. It's because I know Tim personally, and Tim and I have disagreed in the past. But I think that a lot of people, Mikey, if you put up the compare on the December thing here, hit the compare tab on the December FOMC probabilities.
Yep.
You'll see that the probability of the 75 had dipped and is now climbing back up. That's the Tim McLean camp. Okay, Tim McLean is in that camp, that 75. That would be more of reiterating the Jackson hole. I'm not saying that Tim thinks there's going to be 75 in December, but that would be more reiterating the Jackson hole. And again, it's not a surprise to the market. You just look at these probabilities. It's not a big surprise. It's a surprise to a subset of the market, but not to the whole market. Put up somebody who disagrees with me. Is there
Well,
anybody here who disagrees?
who actually, yeah, Coco. Tomorrow the market will move 10% after the Fed pivot.
So Coco, okay, so here's my response to Coco. You're a knucklehead. That's my response. There you go,
Uh,
Coco. The market could
oh,
move up 10%. There's not going to be a pivot. You guys who think that there's a pivot, you're just literally, I want you to let me know where you get what you're smoking because I'm going to sell it on election day too.
uh, Connor, remember to put a question mark in front of questions. Could the Biden advise Powell to go 50 basis points to pump the market for elections?
No, not anymore. I think he could. No, no. I mean, he can't. No, just no.
We're sticking with no for that one, Bob.
Yeah, we're sticking with no for that one. Look, the reason it's a no is if there was ever any, in my opinion, and this is my opinion, I have no inside information on this. If there was ever any pressure from the White House that would work, it was gone after he got reconfirmed and after they pulled him into the Oval Office, him and Janet Yellen, and basically said, we're going to blame you for inflation, which again, that's my story in my head. I don't know that that's actually what they said to him, but that's how I imagine it having gone. And after talking to Michael Farr on our podcast, still to this day, guys, if you did not listen to that Michael Farr Futures Edge podcast, you should, because Michael Farr knows Jerome Powell personally. And I gave him my theory, and he had a very interesting comment on it. So,
Yeah, I just did. You saw this whole correction on
oh
the.
my,
Come on,
come on. I mean,
that was
like,
literally
what the hell are they talking about?
not to do a throwback, but that was a come on, man.
I know. Come on, man.
You
Come
know,
on, man.
first I saw that. First I saw the thing come across. White House economic advisor Bernstein: Biden has endorsed the Fed's pivot, and I'm like, what?
I'd said the same thing.
I like screamed out loud, like, what are you talking about? The Fed didn't announce a pivot. And then correction. That almost blew my head apart.
The correction doesn't even make sense.
I know.
I mean, he's out there blaming Putin for inflation and the Fed for a potential recession, but he endorsed it. The correction didn't even make sense.
I don't know what anything means anymore.
And this is from Bernstein, who is just, I mean, Bernstein, I don't know how he sleeps at night. He's smarter. He's smart enough to know that the stuff he says is like crap. Just so hard for that guy.
Hey Daniel, I see your question mark. I'm not understanding it. Could you type it back in? Waka Waka. The market pushed up on the Wall Street Journal. Well, it's not it's the Timoros, you know. So of a pause. This was a test run for Fed to know if they should do it or not. They got the answer no pause. Why? Because it's a rip your face off rally after the article came out on what? The beginning of the quiet period, and then the timing of everything. These articles, and he's known as the Fed whisperer, and then another one on the morning shows this week. I mean, in the Wall Street Journal article, I thought it was the quiet period.
It used to be Greg Ip, who we used to look at all the time, and then Greg Ip left the Wall Street Journal, and now it's this guy. But there's just in my view, and it's only my view, there's no way they went from Kashkari saying the things he was saying to, hey, we have to let the Wall Street Journal know that we're going to pivot. I mean, and again, this word pivot, I mean, just stop it.
Well, see, I think it's the that word being bandied around was intentional because now it just when people hear, oh, I meant pivot from 75 to 50, but when people hear pivot, they think there's actually going to be a pivot, so it actually
Right.
gets somewhat of the desired effect. Oh, they're pivoting. Let's just buy. Well, remember when the 75 rate hikes used to be like that was going to shock the markets, and now we're debating 75 versus 50, like the stepping down to 50, the change of pace is now the new pivot language when the 75 a few months ago was considered insane.
Yeah.
That's what's getting me. It's like, 75 nothing, but 50, 50, let's rally it to the moon. Oh,
And that was just crazy. They, if they, and again, there's a lot of ifs in this, and then I gotta go unless there's questions. By the way,
there's one
somebody,
more question, I think.
well, somebody typed in there, Bob, will you pay $8 a month for Twitter? And my answer is yes, I will, because it's not about tweeting; it's about interacting with verified people as opposed to bots. So yes, I would. Doesn't mean I would do it forever, but yes, I would.
Uh, where was? Oh, here's Daniel. I asked him to put this. For months, the pundits suggested buying tech, Apple, Microsoft, Google for safety in tech. Now tech is dropping and Dow seems to be gaining. Are the funds in tech now being taken out to buy Dow?
No,
So
I mean, if
is there a rotation out of these big names in tech because the Dow's been on a screaming? I mean, look at since the Fed quiet period, the rally in the Dow, it has screamed.
yeah, I don't think it's necessarily to pinpoint it as hedge funds come. I think is a little. It's just a little. You're thinking small. People are every analyst out there, including me and Mike. Honestly, we always do this, but are talking about buying companies that turn a profit and letting the zombie companies die. And that's why I feel so strongly that Q1 and Q2 are going to be so bad because I think there needs, in order for things to clean out, the Fed has never let the market clean out like it did in 2000, where the companies that didn't make money, that had no hope of making money, went bankrupt. They closed. And that's what we need for the market to be reasonable and get back to normal functionality. Now, that doesn't mean that that's going to happen, but that is what we need to happen.
All right. Well, so real quick, I know you got to go.
Yeah.
Any overall thoughts on earnings season so far? What your like 2 minute take is?
Right now, I would say subpar in tech, probably going to get worse, and decent in value. It hasn't been bad in value, but earnings estimates still have to come down a little bit for Q1 and Q2. That's sort of my take.
Any because I've the one thing I've seen is there's still a lot of inflationary pressure that's been able to be passed on to consumers based off the
Mhm.
earnings reports. Do you agree with that take, or do you think
Yeah,
I'm
no, I agree with that. And it was funny. It was like I saw somebody on Twitter saying that companies were getting rewarded for having pricing power, and that's the greed of Wall Street. Because if they have pricing power, their stocks go up. Well, stop buying the shit then. When the price goes too high, don't buy it. People still buy it.
vote with your pocketbook?
Yeah. So companies with pricing power are definitely, and then there's been, again, on the value side and on the, let's just call it a general category of companies that make money, it's because they have pricing power. It's because they're profitable in the first place, where they can absorb some and up price. They don't have to keep pace with inflation in their pricing power because they're profitable companies to begin with. So, yeah, I would agree with that, Mike.
All right. Well, we'll let you go now. Thank you for your take on
Yep.
everything.
If I'm free, I'll come on and talk tomorrow. Wait, when's the Fed announcement? That's tomorrow, right? Yeah.
Tomorrow afternoon, yeah.
All right. So if I'm free tomorrow afternoon, I'll come on tomorrow afternoon.
Okay. Well, we welcome it if you're free.
Now, I'll let you know during the day, Mikey.
All right. Thanks. Have a great evening. All right. Okay, there we have it. There we have it. Sorry, Bob had a heart. Rod, you'll have to ask that question on another episode, especially during a slower period. Uh, how Path Trading Partners started. Bob's talked about that with, I said I always like to learn things from other people just to see what other people are doing and to support what they're doing. I took some stuff from him and I'm like, oh, he's got some interesting takes on things, but he's missing some concepts from a technical analysis. His stuff was tested out, but I said, hey, you can improve this. So he was already off a great start with stuff. So I contacted him and said, hey, I learned what you were teaching and I made some improvements to it. And then he took a look at them and he's like, yeah. So then we started working together because he was winding down another thing and I wound down another thing. So I was just doing my trading thing by myself. I'm like, hey, we just decided to form Path Trading Partners. It was the best course of action, but you can ask him his take on it. So, I'm not going to rehash everything here because I'm on backup internet and I just went out to get a backup of the backup. Now, hopefully, I can cancel Comcast because I'm just headed. So, I went and got a backup of my backup just in case the backup went out because the primary's out. See the dedication? 3 internet options so I can keep the live streams going. By the way, could I get some feedback since I am on the primary backup? Has it been okay for the live stream? And I'm asking also because my wife's running Zoom calls for her work. Well, this is going on also on the primary backup. So I just would like to get some feedback. I hope it hasn't been too bad. And one of my dogs is watching the Hallmark Channel because it's countdown to Christmas. Not saying that the dog likes countdown to Christmas movies, but I might be saying that. So, Sterling, maybe we can touch on that tomorrow. Some of these, if we didn't get to your questions and they can wait, come back tomorrow or Thursday. Let's see. All right. I got killed midday low volume, wasted 4 hours waiting for markets to bounce and end up taking losses. Well, you shouldn't be killed on any one thing. You can have trades that didn't work, but they shouldn't kill you. You can even have back-to-back trades that didn't work or back-to-back-to-back to trades that didn't work. But it should not kill you if you're doing proper risk management. I like Bob's narratives, but I come for your technicals, Mike. Well, and they won't let me on TV, so oh well. Probably because I wouldn't change my shirt. Probably because I would not change my shirt. Let's see where we sit. Let's get to some technicals. By the way, let me just jump back. We saw AMD. I saw somebody type in AMD miss. I didn't see AMD's as a miss. I mean, here it shows they had reported 67. SC, some of the estimates were down at 65. That's where. So depending on what you taking for the estimates, it was pretty much more in line with it. And revenue was supposed to be estimated 5.5, coming in at 5.6. This is 5.65. It just depends. So it was either a slight miss or a slight in line. Their guidance, though, is what's more. So, that's why I wouldn't call it a real big miss. I would call it pretty much in line. Their guidance, though, is not strong. So I'm surprised it's still slightly up, but it's still within a trading range. I mean, you have the breakout level roughly around 62.50. And remember, this could be an interesting play. This could still be an interesting play if we get a snap move now that earnings out of the way. This could be an interesting breakout play. Stop reduction 64.38. You get the close above 64.38. Target a gap fill. That could be a very interesting little play. Let's just recap. So we had this. We started once those reports came out. 8:45, 9 reports. We just got the selling pressure. We triggered this on the 1 hour and the 15-minute. 15 would have been aggressive. I said to watch for that 1 hour at least. 1 hour triggered and then returned to the breakdown zone and rolled over. So, interesting enough, going into the end of the day, we have another double setup. This one has not gotten to the first target. And also, based off the stop levels, if I could drag it in the right way, theoretically off the conservative targets, this could trigger a run up. We don't have stop reduction, so I'm still have to go with the original stop value of 39.07. So theoretically, this could trigger run up, roll over again, and then still go down. Now you get the close above 39.07 or a trade above 39.14. The double top is done. And if that was triggered by the double bottom, then you would have had the double bottom play out and continue. Can't plan this stuff. Now, if this continues down overnight, European and Asian session, and hits the 38.46 area, then it is stop reduction and those levels change. And also, this little mini double bottom would be off the table. So there. Sorry, there are conflicting signals at this point. Now, the potential double bottom is still a potential. When we reopen, it could be done. It could just go down to this first stop level and pretty much be off the table. So it's just still a potential because of when the market closed. So we have to acknowledge that. Interesting. Also, 1 hour clear path move back up. 15 minutes. There's virtually one stopping point, about 38.84. We've already tested this breakdown zone. Then above there, it's a 15-minute clear path move. If you want to micro manage it, you still have that same virtual stopping area with that where we hit that little mini double, little bounce back, and then kaput. And then the next stopping area on even if you go into the 5-minute is beyond the second target. Now, do I normally go down that much? No. When I'm looking at a clear path move, if this is a 1 hour trade, which you can clearly see it's a 1 hour trade, it's really nicely formed on the 1 hour. By the way, this is the peak, not this. I look at the one time frame lower. So that would be the 15-minute. You don't want to sit here and look at everything. So if I'm looking at a daily, if I'm generally fine-tuning the clear path, I'm going to go to the 4 hour if it was a clear path. Like here, 4 hour clear path, I can fine-tune it with a 1 hour. There's no real stopping points. If I'm trying to micromanage something, then that's the only time I will step down beyond that for clarification. You don't have to go through, because if I'm going through like 20 different stocks, managing positions on 20 different stocks, I'm not going to sit and micromanage everything down to the 5-minute. It's not necessary, because the smaller the time frame, the stopping points, the less important they are. So yeah, you might get a little reaction to it, but it generally is going to be a very small reaction. Other than that, since the bigger double has still triggered, the key areas are 38.46, 38.33, 38.20. Does this pullback invalidate the bigger bullish pattern? No. That's where you got to get the different time frames. If you are a longer term trader, let's just say you're trading this from a longer term perspective. Let's say, hey, you were just trading this head and shoulders and you're a swing trader. Are you going to be worried about this little double? No. It's not even going below the daily rotation zone. It's not even coming back to the neckline. It's nowhere near the stop level for this inverse head and shoulders. That stop level would still be down here, unless you're ratcheting it up more aggressively, which is on a case-by-case basis. So, you wouldn't worry about it. Or at least I wouldn't worry about it, because you're not trying to catch every trade. And you wouldn't be worried about this little double either, unless you already bailed out of something and you were looking for a re-entry, a potential re-entry for your long trade within the bigger pattern. I'm trying to show these different things. It doesn't mean they're all tradable by every person. It means these are the patterns, and depending on your time frame, you may or may not be trading them off that time frame. Also, it's helpful for people to learn. That's why we cover all these different time frames. But even a pullback back down to 38.20 is a blip on the radar screen from this run-up so far. NASDAQ triggered, moving sideways, letting the rotation zone come down, little bounce back play. This is where this little reaction was that little, breaking. Biden endorses the Fed pivot, and then it was like correction. So 11,238. There's no little potential double on the NASDAQ. 11,238, 11,173. Major support coming in at about 11,100. Technical target is 11,109 area. Where does that take it in terms of the daily? Remember, the NASDAQ has not been able to get above the 25th of October highs, and that would be back to return it to the neckline. And NASDAQ has not had a stop reduction from this very sloppy inverse head and shoulders. The Dow did trigger and bounce stronger. The stop level, since it has not hit stop reduction. And again, why am I dragging things the wrong direction? On the closing basis, 32,873. On a trade through basis, 32,924. If we drop back down to 32,425, those stop levels will go down. And no, there's no potential double bottom here. So it's simplified on the Dow. Remember, that pattern would only even take it back to the daily friggin' rotation zone. So would it change anything from a major bullish position? We bounce back down off the 200, retesting it. Even this break below the 200 would not shift it to an overall bearish pattern because the targets are here. Russell, not yet hitting the second target, could not get it above the those morning highs. And this is not a potential double bottom because it's not reversing enough of a move. If you break higher, roughly about above 1867, the targets would be the area of the recent high. And then you'd use at least the reverse harmonics. I'll get back to questions in a second. DAX, after complete the double and pausing at this area, the key pullback level on the DAX is about 13,175 that I'm watching for. There is no significant topping pattern just yet. This did not qualify for a double. It could still push up and qualify for a potential double, but nothing yet. Notes, some very decent volatility today. Very decent volatility. Again, we have the potential double top in place, not confirmed or triggered. That's the only thing I'm paying attention to. And that would be on a closing basis below 110.12. Dollar index, another volatile day, and outside reversal day with the close coming in at yesterday's close. So lower low than yesterday, higher high, and the close virtually in line with yesterday. What's that telling me? Not a whole lot because of where it closed. It tells me we had a lot of volatility. So, breakdown levels below today's low, breakout levels above today's high. Other than that, nothing new. VIX, still this little potential double. Bottom, nothing today invalidated it. So that's the more bearish play within the bigger bullish context. Even if that little mini VIX double were to play out, it's returning to the breakdown area and the trigger point of the daily double top. It's just fascinating how many counter potential moves we have within bigger term patterns. Crude, nothing new. The stop reduction zone hit again, but the trade is still in place on the bullish trade. And is that a bullish trade to 115? No. This is a bullish trade to the potentially this recent high area. All right. But I wanted to touch on something else and I'll get to questions. Tesla, which we had the gap up today. The gap up. And then fill in the gap with the gap harmonics, just for the review of people who are alerting that. From the close, here was the first level, spiked up. Then you watch for that pullback 62.5, close below 62.5, a little counter reaction, and then the full gap fill play. What I wanted to point out on this potential double bottom, though, which I was watching on the 4-hour and the daily, the gap up and then the 4-hour close below it. Remember, it can't trigger with a red candle on a double bottom. You need a green candle to trigger. You actually need an up close. This did not trigger it. So we've had multiple confirmations, but no trigger on that double yet. No trigger. And of course, the daily with that reversal did not trigger anything yet. So that pattern is still a potent. It's confirmed, but not yet triggered. So the only way to use these would be for intraday levels. Should it break up and just take off tomorrow, it'd be 242.65. I'd still utilize as a target. Beyond just still eking out this other gap fill is not 100% complete. But other than that, this is not confirmed. You have not had, especially on the daily, there's been no daily close above the key point. All right. Let's see. All right, thanks for that feedback on the stream. So it's been good. No glitches so far. Thank you. Thank you for letting me know. Low volume is hard to trade. It is very hard to trade. These markets are hard to trade. These are some of the hardest trading markets. They're way harder than 2008. And I think they're, at this point, they're hard. They've come in harder than even 2000. I think these might be the hardest period of markets I have been through for this extended period of time. There are difficult markets to trade at times, but they usually resolve, within 60 days. This has been tactile trading for months. And just the reactions, the constant reactions to a shifting potential narrative. How many times have you heard the word pivot over the last week? And the market's like hanging at every. If you just sneeze the word pivot, the markets can shoot up or down. It's absurd. Especially with all the algo driven stuff that scans the headlines and sees a word in there and then it's like goes on a frenzy. Like the algo is programmed to just scan for words from certain news sources, like pivot from a certain news source. If you get fed and pivot in the same sentence, that's just a buy. It just goes buys everything. Buy the futures, buy. Mortimer, buy. Oops, wait, what do you mean? That was the. So, Gary's learning to trade futures. Who are you asking? How is your trading today? Did you short or go long like me? I went through the patterns I was watching for this morning. I put them on the screen. You tell me what you think. Watch the morning, watch the afternoon. The patterns are out there. And it's, by the way, I'll give this clarification, and this is not just for this channel, it's for any channel out there. It doesn't really matter. The whole point is for what you are doing or if you're learning things. Now, because here's also the thing. People realize, what'd you do today? Well, let's say I went short. Or let's say I went long. But then let's say that was in the S&P futures, but then I have a huge leap option position on that's a huge short position. And I went long, and I'm not saying today. Well, I said I went long because I'm using a counter trend rally. I'm using the S&P futures to hedge off on a rally mode the huge short position from a much larger time frame. So what does it matter if I went long but I'm really short? Or what if I'm short a bunch of stocks and I use a long position in the S&P to hedge, or I'm long a bunch of stocks and I say I went short but it was just a hedge over long positions? See, are you talking, and what time frames are you talking? This is where you can't dissect everything. On any given moment, on multiple portfolios, are they long? Are they short? Are they hedged? Are they unhedged? See, it doesn't matter. Because you can't take what anybody says. It's like when somebody says, oh, I saw this massive put position go off. Okay. They must be knowing something that the market's definitely got to be going down. What if it's just a hedge? Or what if they were adjusting another position? You don't know. Okay? So that's the whole thing. People hang on all this information. At the end of the day, the only person you're accountable to is yourself and your own trades and your own time frames and your own trading plan. My trading plan is going to be very different than everybody else's who watches this live stream. Bob's trading plan is different from mine. I guarantee Waka Waka's is different. Sterling's is different. You have to generate your own trading plan, your own time frames. You can learn techniques. You can learn entries. You can learn systems, but it all doesn't matter unless you have your overall trading plan, the way you're managing an overall portfolio. An overall portfolio, stocks, bonds, options on different time frames, foreign exchange. There can be other things in there. Cryptos. You know, when there's high correlation in the crypto markets with the NASDAQ, you could use NASDAQ futures to pretty much, let's say you're long a bunch of cryptos and they start tanking. You could use, when there's high correlations, you could use NASDAQ futures. Is it easier to go sell some NASDAQ futures to hedge a crypto portfolio earlier this year rather than trying to short some cryptos or unwind long crypto positions? Yeah, it's a lot easier just to hedge with some NASDAQ futures to offset, or even say I'm going to make up for it because I'm going to short larger position size than I have in crypto because I'm more worried at the downside, and I'll take advantage and make some extra money based off, generate some extra alpha. So that's where it's all into account, and that's where you can learn, and you can learn from a lot of different people. There's some who are just absolutely full of crap out there, and there are some better for others. But asking what people's position is on, or did you go long or short today, you don't know anything about their portfolio or positions. So it's irrelevant unless they were going to sit and do a whole portfolio review with you. It doesn't matter. And most big traders, or most people who have a decent sized portfolio, might have multiple things going on, and they literally have to do the whole portfolio review, especially if they're good at mitigating risk and hedging. One day they could be short to offset something else going on. The next day they could not have a position because they're letting their portfolio kick in and they're already net long. So they don't need to do anything from the long side because they're already, maybe they're net long with a high bunch of beta stocks and the market's just triggered a bunch of bullish patterns. They don't have to go along the futures. They might only put on futures to neutralize or take advantage because they're in a high beta portfolio. So if they want to offset when the market's retreating, they might go short some extra futures to offset their long high beta portfolio. These are things that the average person doesn't think about out there, who just wants to know, did you go long or short? So that's sort of a little, and I'll probably have to make a separate video on that too. I don't think a lot of people even talk about that concept out there with people. That's why it's irrelevant. Unless there's only one market, but they might have multiple. Did you go long or short crude? Well, let's say you have a macro short position, but then you're offsetting, for example, crude. Let's say this, when this double triggered, this massive weekly double triggered, there was a long-term short position. Maybe it could even be set up in the futures options, or it could be set up with a lot of different ways. All right. So overall, there's a big macro short position that can take months. But in the meantime, you'll go long or short. Well, yeah, I'm long with this little pattern to offset some of the burning short, especially if it was options. Because maybe I'm extra long a few contracts to offset the stalled out move to the downside. All right. So, yeah. William wants Netflix. Then I'm going to wrap this up. For now, Netflix pulled back to the daily rotation zone. no, this was not a double top pattern here. This is just an ordinary pullback. The key area I'd be focused on in the short term is 280, right in front of 282. Why? You got your 4-hour rotation zone, you have the 25% harmonic, and you have this little base there. You still have a little, and that would be to the technical full gap fill. Remember, the gap fill is not to the top of this candle, it's to the bottom of this candle, right there. So in the short term, that's what I'd be focused on. Where does that take it? That would then take it into the daily rotation zone. So depending on your time frame, if you start getting below this area and that area breaks, you could easily see a run back down to 270.23. Why 270.23? It's a harmonic area, the 200, and right in front of the bottom of the rotation zone. It starts getting below there. Remember, you have a gap left behind, which could retest this upper channel breakout zone. So, depending on your time frame and what you're doing, would determine those would be the key areas I'd be at least utilizing for stop levels. Anywhere in here from where it closed today to an even potentially bigger pullback is within the daily rotation zone for another rotation back up, with cycles still heading down but not yet at the bottom and getting out of overbought condition. If this rally continues, I think Netflix is still in a really good place. It has not been able to close yet above this. This is not the gap harmonics. This is from the highs back in March to the lows in May. It has not been able to close above this 62.5 yet. So that would be, besides a trailing for a long, that would be a key area I'd be watching to hang on to my longs for longer if it was not stopped out on a pullback. Why? Because then the next target area, overall it favors a potential move to 87.5, but I would not, the next target area I would be using is this breakdown zone and the 75 for at least an aggressive stop reduction up there. Also, to put timeframes in perspective, you're getting the reaction to the area of the 50-week exponential. 50-week is also important, whether you use the 50, the 52. I just don't change it because it's not going to make that much of a difference. It's an area. If it does chip through here, that could be another accelerating area back to this key breakdown zone. And you have a cycle rotation still down in the daily. Why am I don't care if you don't trade Netflix. I'm trying to go through something so you know how the analysis works. This is not yet at the bottom and moving up, but it's going to take a whole nother cycle rotation before this tops out and rolls over. Now, when both your daily and the weekly get to the topping again, so weekly's up here. When the daily gets to the bottom and top again, and you have both at the top, I would personally get much more aggressive with stops from the long side. Hey, Peter, LOL, Mike is breaking it down, keeping it real for the squids, helping. What I'm trying to do is, thank you, P-Dubs. I'm trying to give, especially, there's a lot of people who on YouTube who haven't even considered this stuff, and they get a lot of pablum fed to them. There's good people out there. There's also a lot of junk, as I said before, and people ask questions like it really matters, and it shouldn't matter because they don't consider portfolio analysis. They don't consider all this stuff. And it's all important. All right. At least when it comes to this channel. Like, don't I get any points for having 5 rescue dogs? I don't get no points for that. Even Roscoe, who's been on a barking spree. Roscoe! Cute, 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 cute. Roscoe Pico Train here. Cute, cute, cute. Anybody in the older crowd watch Dukes of Hazzard growing up? The original TV series? Uh, did you go long or short today? Yes. How much taxes are you liable to pay if you sell before? What do you mean? In what? You mean stocks, futures? Futures are taxed differently than stocks. Stocks, are you talking long term capital gains? Are you talking short term? Are you a pattern day trader? I can't answer that question. Nor will I answer that question because I'm not your accountant. And I wouldn't want to give you wrong advice anyways. And it's a very nebulous question. You have to run your trading stuff through your own accountant. And those are questions to ask your accountant. Based off your status as a trader, what are your time frames? How active are you? And what instruments are you trading? I know this is first year I'm profitable, and now I'm thinking how I can make less transactions because between commissions and taxes, it makes sense why longer holds are preferred. For stocks, especially. You're welcome, Anissa. Yes, yes, I yelled at Roscoe. I was telling Roscoe. Roscoe knows when I yell his name like that. It's better to be quiet because I'm on a live stream. Roscoe is a very well loved dog who also came from not good circumstances. I'll have to find a picture of Roscoe now that we've brought up Roscoe. I call him my fat furry. He is unfortunately, a very lazy dog. Although he was crated all day for 10 to 12 hours every day and barely let out. But if anybody wants to see here's Roscoe and Smokey. Let me see here. Let me see. Let's see if I can do this. Let me just see if I can do it this way. Ah. All right. Come on. Here we go. Sorry for the delay. Here's Roscoe and Smokey. There's Roscoe. Can everybody see there? There's Roscoe. Right here. And there's Smokey, the rescue from South Korea. Sleeping back to back. So now you know what those two look like. There we go. Thank you for using the word pablum. That's a beautiful word that's hardly ever used anymore. Oh boy. You don't have to answer my question. You made fun of me, but thanks. I wasn't making fun of you at all. I was answering your question because it really doesn't matter if I told you I went short or long or both, or short, or long, or short synthetically through options and long in the spiders. And I was not making fun of you, Santa. I'm sorry if you took it that way. I was clarifying for everybody out there why it does not matter. Because going around even asking at the grocery store, what's your position? It's irrelevant. It's completely irrelevant. All right. With that, I will wrap it up for now. I didn't see any other stocks. I'm just going to check in after hours with AMD again. I'm just curious. Okay, still in at the getting close to that breakout area for AMD. Was there anything else I didn't look at either? Tomorrow earnings, we didn't go through this earlier, but not much that's going to be market moving. I'm personally going to check in on CVS. I'll glance probably Humana, but nothing else other than that. And everything tomorrow afternoon is pretty much going to be dwarfed by the Fed. Qualcomm could be interesting, but everything else is going to be dwarfed by the Fed. So that's where we sit today. With that, I will chat with everyone later. Thank you so much for being here. Thank you, Rod. And remember, how can you forget Fed Day tomorrow? I will be back on at 8 a.m. Central, and then hopefully Bob can join us tomorrow after the close for the Federal Reserve wrap-up and the trading day recap. Talk to everybody later. Bye for now.